Welcome. We are back. Another day in the market and quite crazy. Well, the SPY itself in the overall market, pretty quiet today apart from the bond auction. And Fisker dropped a lot today. We saw a lot of cryptos have a good day. So we're going to talk about everything I didn't stream the last couple nights. So I'll recap what's been going on in the week. Probably just a shorter stream, going to get to the main points. So let's get right into it with Bitcoin first. Bullish engulfing candle, pretty much printed an hour into the new day. This is the highest daily close for Bitcoin ever. Pretty good stuff there. Really breaking above 69K was the key. Traded up to about 73.2K. And now we're really just going to zoom out. Like, it's kind of just parabolic at this point. Like, there's not much of a pattern here. We're just seeing an increase of demand pretty much nonstop. BlackRock is buying up a lot of Bitcoin apparently. Major institutions buying. I'm sure we haven't even seen the full length of the amount of FOMO from retail traders yet. I think anything above 69K in the short term is bullish. That's your previous all-time highs. We really zoom in here. Tuesday was the perfect backtest day for Bitcoin. We pretty much confirmed an all-time high close breakout on Monday. Then Tuesday, you flipped previous all-time highs from 2021 into a support. Then you got fall through today. So anything above 69K short-term looks good. Ethereum hit 4K. As you can see, that was a top from September of 2021. And that's pretty much where it's been testing for the past few days. It's kind of very similar to Bitcoin at 69K right over here. Just kind of testing the waters. We will see if Ethereum can start to play some catch up because Bitcoin's made it up here. It's already surpassed 2021 all-time highs. Ethereum has not. Then there is also the new crypto swing, which is sitting nicely in profit. This was alerted for free in the Discord. Links down there. It's up about 9% currently. So this is doing all right. It's about halfway to the first target. Anything above $10 here looks pretty good to me. And moving into other markets, let's take a look at the 2-year. Looks like it's bouncing a little bit off that 4.40 level. 10-year, retesting the 200-day moving average. Dollar is trading a little bit lower here after breaking the 200-day moving average. VIX, unfortunately, didn't get the big spike up. I mean, I guess if you're long on the market, that is fortunate. But it didn't get the big spike up that historically it kind of does tend to get on the first test of a 200-day moving average breakout. It's really interesting here, not that TA matters much on this chart, but in general, just every single low has pretty much been slightly higher than the previous one, which is really interesting. It's like every single time that the market rallies, the VIX is making this high or low. So we'll see what that turns into in time. Metals have been amazing. We've watched these patterns develop for the last few months. Silver is finally breaking out of this huge triangle on the daily. We've just kind of seen silver literally look like, I don't know what the exact term is, whenever like they hook your heart up to that thing and it's like a frequency. Literally that's what silver has looked like. And now it's kind of like just breaking out. I actually had a premium member today ask me about the SLV ETF. And looking at this ETF, it's also testing a breakout pretty much on the weekly. So metals starting to get pretty hot. I know Lord Bogendoff in the Discord just made a presentation on gold, and I forgot which gold ETF it was, but one of the gold ETFs. You can go check that out in the trading floor channel. Gold itself, beautiful move here. If we take a look at the GLD ETF, 194 was the inverse head and shoulders breakout level, so that's good as well. And then finally, for other markets, the Hang Seng Index, very big breakout. Okay, 3% green day, breaking back above the 16.9k level. You can see these two lows from over here, as well as this low and this high and this high. That's a very key level, and actually broke above it on the 4-hour chart. I didn't even really mention this, but if we really look at this 4-hour, there's some of you with the well-trained eye can already get the idea here. But that's really a decent looking inverse head and shoulders breakout right here. Chinese stocks starting to do pretty well. Keep an eye on them. Moving into the overall market, the SPY had a pretty flat day today, and it's just continued going higher and higher within this wedge, which has been pretty crazy. Let's fix these oscillators a little bit here. So it's really just going to keep wedging up until it breaks up or breaks down. I'm bearish still on the SPY. It's still around the same price as it was last week. When I said I was bearish on the SPY pretty much last Thursday, we're right around the same exact price. In between then and now, we did dip down a little bit, and then we rallied up on CPI yesterday. If we take a look at the 4-hour right now, kind of have that classic bearish divergence. So you did get a 4-hour bearish engulfing candle. If we take a look at the 1 hour, this is the pattern I have here. I could probably chart it a little bit better. There we go. Pretty much 4 touches on the supply line, apart from this one candle that broke above it. But really, that price action was not sustained. You got a tweezer top over here before selling off. So I think under 518, the SPY still looks bearish to me. Intraday today, we had a very small range, but you topped out pretty much twice at 517. That's going to be the key level for tomorrow. You can see I already have my alert set up there. But yeah, this is just, I don't know. I think at some point this is bound to break down. I think there's a slightly higher likelihood of breaking down rather than up. So we will see, but the trend is still your friend if you're a bull. Take a look at the Qs. It was quite interesting today. Very spread out in terms of different sectors of the market. The SPY was pretty much flat. The Qs were down almost 1%, and then the Russell was up about 0.5%. So the Qs actually, the SPY is a little bit more in the middle of its rising wedge. The Qs are actually retesting a breakdown pretty much here. And you had an inside day, so again, pretty quiet, classic bearish divergence. 4-hour chart looks just kind of sideways. 1-hour chart, I'm honestly gonna extend this. It's just a big range. It's really all it is right now. A big range on the Qs. I mean, I have a lot of zones here that don't matter too much for right now. But if we're gonna take a look at this as a pattern, I guess it's just a triangle forming. So we're waiting to see which way this breaks out. There you go, that's a Qs triangle. Should break out, or actually definitely will break out in one direction by the end of the week. So keep an eye on that. If we take a look at the Russell 2000, it's been really testing this range breakout for about a week now. It's still managing to hold above it. So just barely above it, bullish engulfing candle today. Definitely looking better than the large cap ETFs / indices. So a little bit of outperformance here for small caps in the short term. And continuing on into some large caps now, Amazon. They're all kind of doing this. It's like they look like they're breaking down for a second, then they go back up, and they look like they're breaking down. It's just sideways price action. The simplest way to put the market, I think, in the last week or so is we're just seeing distribution, not Wyckoff distribution, but just regular market distribution, where there's an equilibrium of buyers and sellers, and there's just a balance in the short term. There's an equal amount of demand and supply. So until we see an imbalance between those levels, it's just kind of a 50-50 coin flip type of market. So there's not too much analysis you can do there on a name like Amazon. Apple, however, I would say looks a little bit more bearish. I mean, if we zoom out here, this is kind of the lowest it's traded under the 200-day moving average since January of last year. And then on lower time frames, yes, you do have that bullish bat, but you have hidden bearish divergence here. And then it pretty much just seems like a bear flag is starting to form. So if that breaks down, then maybe it cracks under 167, which would be the neckline of a pretty major double top here. Microsoft, again, it looked like it was breaking down. Now it's back up. A lot of these charts, a lot of these large caps right now, same thing. You can see this range I have highlighted right here. It's just distribution. Google, pretty decent rally off the 200-day moving average. MACD is back to green. This one actually doesn't look horrible. I would say out of the large caps, this probably is one of the decent looking charts. The important zone to get back above though would be right there. You can see how this was resistance until you eventually broke it right in the beginning of the year, and then you gave it up at the end of February. So retesting that critical zone, again, previous all-time highs at 152-ish. Gap fill right around there as well. That's the next key level. Pretty much your key resistance is 152. Key supports the 200-day moving average on Google. Netflix, very similar looking chart to Amazon. It's like, it looks like it's breaking down and then it's really not. The larger picture here though is it's pretty much at the PCZ of a bearish cipher. We'll see if that means anything, but I don't know. Maybe the Jake Paul, Mike Tyson fight this summer is gonna bring them more customers. We'll see. Netflix, I mean, I feel like they've transitioned in a lot of ways. It's a little bit hard to tell what it's gonna look like in a couple of years. They're really just in a transformation cycle currently. And yeah, apart from that, I'm not really seeing anything else that moved too much today. There was SOUN that went up a decent amount. Tesla went down 5%, unfortunately. This actually is a swing, and this is kind of its last lifeline for right now. It's testing the demand line of this downsloping channel. And I mean, look, the stop is at 162. If it doesn't bounce here, then it could be headed down to test this 154 support level. Let's see what else we got to move on. HOLO, I know that was a crazy name earlier. In February, that's kind of sold all the way back down and just popped a little bit, 37% dead cat bounce today. And Rivian sold off, down 5%. It was actually trying to reclaim lows from April of last year at 12 bucks, and it just really couldn't. Ford was up a couple percent. That's just in a range though. Let's take a look at some chips now. Intel, down 4%. I mean, if we're gonna look at this as a pattern, it just seems like it's an ascending broadening wedge. So waiting to see which way that breaks, but I think 42-ish will be the key breakdown level, and then your key resistance is around 50. If we look at the rest of the chips, Nvidia, it actually had a decent recovery intraday. It was down more, ended up closing down 1%. 1 hour chart, there's your demand line, and then maybe just chart a supply line like that. I mean, you might need more touches for confirmation here. But a lot of these chip names that blow off the top candle, especially the one that we saw in Nvidia last Friday, you've kind of just been retesting it, kind of going about, let's see if the fibs are right, 61% of the way up. Let's see. Literally, your high was about 60% of the way up here in terms of fibs. So you hit the golden retrace there. We'll see. I mean, this is a key level. If it can get above like 920-ish, you might just go back to retest all-time highs. Otherwise, you could see it as a golden retrace before a continuation of the sell-off. AMD did a little bit worse today. Look at the level. I charted this out for all of you last week on stream, right when we had this candle. And I said, look, you have a gap fill at 192. You're probably headed there next. You would literally hit that today, bottomed out there, got a little bit of a wick there. So now that's the key support in the short term. To the upside now, though, you have a gap fill at 205. So do you break above this gap fill first, or do you break under this gap fill first? That's kind of like the short-term way to view it. We got a couple of other chips here as well. MU down a few percent. Not a big fan of how this is back under 98. AMD and Nvidia did a much better job of breaking to all-time highs, and MU just kind of, it got above it for like one day, now it's under it. And I didn't even see this until somebody posted it on X, but apparently we go way back in time. This is not just your all-time high from 2021 that you're testing. This is also the all-time high from the dot-com bubble before I was even born in 2000 that it's retesting. And I think the post was like, imagine some people are finally selling Micron stock after 24 years of being at a loss, just waiting for it to be in profit. And I'm sure there was a couple people that lived to see the day of MU returning to in profit when they fell within all-time highs of the dot-com bubble. Qualcomm. This one actually looks decent to me as long as it holds 167. Your next major resistance is 193. That's pretty much it for the chip stocks. Let's talk about the hot topic today now. Fisker. All right. I said this earlier in the Discord. I didn't really talk much on X today. I just wanted to kind of talk about it on the stream. It's just the easiest way for me to be authentic. Literally this morning, I bought some Fisker at 31 cents. Basically, I was primarily adding Fisker, like the bulk of my position in this area. A lot of people, for whatever reason, think that I was buying Fisker all the way up over here when it was $5, $10, $15. I was just trading options over there. in terms of shares, I really didn't enter shares until it got down to the dollar area, and the bulk of my position was added here right before earnings. And then I kind of increased the position after earnings. And most of my averages I've in a few different accounts are under like 70 cents. One of my averages is actually like I think under 40 cents. So I was pretty comfortable here at 32 cents. So up until today, it sounds crazy. The stock dropped from $30 to 30 cents. I was actually pretty comfortable with it shares wise. However, for the first time, I've made multiple videos on it, multiple streams. Yeah, this is the first time that, okay, I wasn't thinking that with no earnings or anything, it was going to drop another 50% after hours, and it did. So yes, a lot less comfortable between 32 cents, so I think like 17 cents after hours. So, I mean, even myself, I'm a little bit just trying to be patient here. Really, nobody knows what's happening, and that's the bulk of it. We can take a quick look at this Yahoo article here. Fisker has hired restructuring advisors to assist with a possible bankruptcy filing. The company has hired financial advisor and law firm FTI Consulting and the law firm Davis Polk to work on a potential bankruptcy filing. Fisker didn't comment on this. Earlier this month, Fisker flagged going concern risks. Basically, in their earnings report, they said they don't know if they're going to have cash to survive the year. They have over $1 billion in debt and a lot of different things. And what ended up giving a little bit of a pop later that day, I think earnings was on the Thursday and then it popped on a Friday, was there was a rumor about Nissan and Fisker talking about partnering. So now you have pretty much this news today. Look, there's been many companies that filed for bankruptcy and they just restructured their whole entire company and restructured their debt, and they literally use bankruptcy as a lifeline to save themselves and to become profitable years down the line. Then there's other companies that file for bankruptcy and you never hear of them again. Nobody really knows yet what type of bankruptcy this is, if it is even a bankruptcy. Fisker hasn't even said anything themselves. So it's tough. 50% decline on a rumor of a bankruptcy. Even if it is true and they are going that route, you never know if that actually helps them in the long run. We will see. There's really no update on the Nissan thing. They just really haven't commented on too much. There is a couple things I do want to say though. To me, this is not necessarily something that's a surprise. I think after they had that earnings report and they talked about the fact that they don't know what's going to really happen for the rest of the year, how they're going to get money to keep surviving, this was probably something that doesn't take a genius to figure out. I didn't think it would be this soon. And I think that Henrik Fisker was on Yahoo Finance or something in some sort of a video, and he was basically asked whether he thought Fisker would go back above $1 within like 6 months or so, because there's a deadline for that. And he said that because of their switch to dealerships, and some strategic OEM partners, that he did think it would. I don't really know how new this bankruptcy thing is. I don't know if this is something that's been in the works for weeks or it's literally news as of today in terms of like Fisker, like how have they been looking at this? Really, at this point, I've been saying the same thing since it went down to $1. That video is still on my channel. When you get down from like a $10, $15 stock down to a penny stock, it becomes quite literally a 50-50. It's like 50% chance that the company goes bust, you lose all your money, 50% chance it's an amazing generational buying opportunity. So yeah, it did suck to be down 50% on my position within like 5 minutes after hours. But like I said, since I've been averaging in since $1, every single dollar I put into it is riskable. I've lost more on singular option trades than I'm currently down on my whole entire Fisker shares position. Not to say that it doesn't sting a little bit, of course it does. But this is simply, in my opinion, just a failure of management and accounting and financing. I think the D2C model, they've clearly already figured that out, that was not the way to go, and now they're switching to dealerships. I think they just kind of really liked that, and that was like a very hot term during the COVID market when everything was kind of work from home. Not having to have a physical dealership just made sense, but now they want to have a physical dealership or partners with physical dealerships for more publicity and marketing. But even that's not even a huge issue. And there's a lot of people talking about the YouTuber that we already watched his video on the stream. You guys can go find that. That has nothing to do with it. There's people on X posting that like Fisker's stock has dropped so much because the YouTuber reviewed it as the worst car ever, and that video got 5 million views. Fisker fell from $30 to $1 before he made that video, and he actually quite literally made that video right over here, I believe. This is, you can go look it up, the date that he posted it. A week later, it was trading at the same price. This drop over here had nothing to do with that video. This drop was because of their earnings. So no, that is just FUD. All right, fear, uncertainty, and doubt. Anybody saying that that video has anything to do with it, they just want to get your clicks, they want to get your attention so they can make money off of ad revenue, okay? There is no ad on this stream. I'm not doing this for your publicity. I'm just telling you what it is. There was a failure of management and they didn't have enough cash, and it currently doesn't look like they do, so they need to find a way to figure that out. So that's important to note here, and I think that the product is fine, but they really need to figure out how to fund this company. They failed once before. We'll see if it happens again, but I think that's the majority of what can be said here. If some sort of a Nissan partnership or even any other company is to be confirmed, I mean, it traded up to, I believe, 55 cents, so we can actually figure that out right now. When that rumor first came out, it traded from 38 cents, went up 50% to about 58 cents. I mean, I think that's very doable again, because not only are you reiterating that rumor of a partnership, you're also seeing the fact that that can help recover themselves from a bankruptcy. So we will see how this turns out, but yeah, just so it's clear, like, this is a financial issue in my opinion. We will see what it turns out in terms of product. I really think it's just kind of stupid to be talking about rumors until the company comes out and releases statements. So I'm waiting to hear from them. That's pretty much all that can be said for right now. I might add just a little bit down here at 17 cents. Not planning on selling. I mean, whatever's left on the table at this point, it's like I can risk it. So I might just add like a little bit, just average out a little bit more. But like I already said, the majority of my position is done. If they're able to recover from this should be a $5 to $10 stock easily. And if they're not able to recover from this, all money invested in it can be lost. So just keep all of that in mind. And that's pretty much it for Fisker. Apart from that, in terms of trading lately, didn't learn anything today. Was pretty choppy. I am currently in SMCI puts. I should have taken profits on it this morning when it dipped down 4%, but I didn't. So I'm currently short SMCI. Very risky. This is a very hot company right now. I'm just thinking if there's another blow off the top candle again, maybe this wedge has something to do with it, but we will see. I'm also in SPY puts as well. Same thing here. With this type of market condition, I think it's just fully riskable positions are the simplest way to not lose your mind trading these types of markets. So the last couple months have been great on the upside. I've traded a lot of the upside in the past couple months, and now I'm starting to get a little bit more bearish. So I'm starting to trade the downside, but you can't just go and put your whole account into puts because you're bearish. You have to remember the trend is still bullish. All right, I'm not going to go and try and call a top when a trend is insanely bullish. You haven't even broken down yet. So I'm just kind of nibbling at puts here and there in case we do get a flash breakdown one day, and that's pretty much it. So hopefully those were some good updates. I just wanted to quickly do a stream here. I'm going to be transitioning more into like regular videos on YouTube. I have a new partner we're going to be working with, so maybe a little bit less of the streams moving forward for the next couple of months as I finish up my college. And I got to catch up on some of these classes, honestly. And then a lot more videos like on the weekends and stuff. So look forward to that. If you're not on the Discord, the link is down there in the description. Make sure to check it out. I appreciate all the support. Remember, trading is a long-term game. You can't get too caught up in the short-term ups and downs. It'll mess with your head. So just think about the long-term, improve 1% every single day. Thank you for watching the streams. Hit the like button and the subscribe button, and I'll see you in the next one.